This is the weekend edition of Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, our weekend show is all about the two of us each nominating what we think is the biggest story of the week, the most remarkable story, the sleeper story, and our favourite story. And it is very competitive. And I'm here actually just trying to crack my knuckles into the microphone, because I thought that would be a really cool sound effect. And I can't do it, and it just hurts quite a bit. So it's kind of backfired on me. Can you do it?
No, I can't do it.
No, okay. All right. Well, neither of us are as tough as we're trying to pretend to be. We still need an adjudicator, though, because we're very competitive. And our adjudicator every week is our fearless Fear and Greed colleague, Adam Lang. Adam, good morning.
Oh, good morning, Michael. Good morning, Sean.
Hail the great man. Hail the great man.
No buttering up. Thanks.
Oh, right. Sorry.
Shall we jump straight into it?
Yeah, let's.
Because there are some huge stories around this week. So I'm anticipating a pretty good contest.
Would you like to go first on the biggest story, Michael?
Yes.
Right.
Yes, I do want to go first.
What a change in tack.
You know, and I feel like today's going to be very good sportsmanship from all.
Yeah. Look, so far.
It's only early days. We're only a minute in.
Yeah.
All right, biggest story of the week. Let's do this because, Sean, you know what? I actually think there should be an alarm that sounds basically whenever I start talking about economics.
Whoa.
Because you know that if I am doing it right, then it must be a big story. Because normally I'll pick something to do with politics or kind of or airlines or something like that. But this week it is undeniable that the biggest story around is the inflation data. Because please, geez, that sportsmanship lasted a long time, didn't it? The worst of the inflation crisis is over. I can say that. The consumer price index, I say it with confidence, because the consumer price index figures this week were slightly lower than expected, 1.4% for the quarter, 7% for the year. The trimmed mean rate, of course, Sean, which the RBA really cares about, 6.6% for the year. Good news. Great news. We're not obviously quite out of the woods yet. It'll take a long time for prices to kind of come back down across the board. Food prices, for instance, are still rising. Rents are still going up, pushing the cost of services up. But the cost of other goods like clothing and footwear and household furnishings and petrol is coming down. So why is it so significant? Well, because it may well give the Reserve Bank cause to continue its pause on interest rates. And that's good news for struggling mortgage holders and for the business community. The fact that inflation is potentially now coming under control is surely a major boost to confidence. The fact that we are past the worst of it now, according to these figures, suggests to me, Sean, and I'm seeking your support on this, and yours too, Adam, as well. It suggests to me that we need to coin a new phrase. Because we have passed the worst of it now, these figures show that, right? We can accept that. Everyone agrees. Done.
Yep.
We have now passed, I declare, the inflationary solstice. Just like the winter solstice on June 22, which is, Sean, as we discuss every year, when you know that every day after that is going to get just a little bit longer, a little bit lighter, and things are going to get better. It feels the same way to me for the economy right now. And that is why I am declaring here and now this week to be the inflationary solstice, and we are now on the other side and things are looking up. That is why this is the biggest story of the week. Let's just call it a 4-0 victory right now. Michael Thompson, victorious. Sean, I accept your forfeit.
That wouldn't be much of a show, would it really?
No, but...
Great story, though. Great story.
You know what? You should jump into your story. I'm not going to ask you to forfeit. Just go for it.
Look, it's hard to go past the big changes announced by the federal government around immigration policy, particularly highly skilled workers. It's the biggest overhaul in 30 years, and in short, the government wants to fast-track highly paid permanent skilled workers, which, as they put it, have a great economic value. Now, I'm not real comfortable with judging people on their economic value, but still, just let's park that for the moment. All sorts of changes. Inbound skilled workers will no longer be bound to their employer, making it much easier for highly paid workers to enter Australia and start working. The points test to select permanent skilled migrants will be dropped. Priority will be given to filling those skills gaps. That's where it comes to that whole long-term economic value thing. Underpinning the new rules is a 3-tier system where fewer regulations apply to high-wage workers. At the top tier, there'll be much less bureaucracy than at the bottom tier. All temporary skilled workers will have a pathway to permanent residency as part of the changes. Man, it just keeps going. There'll be an increase in the minimum salary required to bring in temporary workers. Now, the government said it will change what's called the temporary skilled migration income threshold from almost $54,000 to $70,000. It'll be easier to get people for occupations including technology, financial services, consulting, law firms. We could have thousands and thousands of new lawyers in this country. How exciting is that? It's basically about winning the war for talent, including lawyers, and having an immigration policy that thinks about stuff like technology and net zero carbon outputs rather than, manufacturing and stuff like that. Huge change to migration policy, which will have a huge economic impact, assuming the government follows through with it, which it intends to do. Mostly business groups and others have welcomed it. Massive story.
Adam, did you do debating at high school?
On occasion, I did.
So you would be obviously familiar then with the bell that was rung kind of when you were...
Or reaching a time limit.
Yeah, exactly. Do you think we should bring one in for Sean? Because that was a really long story, wasn't it? And you could just picture he gets...
So much going on.
He gets one bell at 30 seconds, 2 bells at kind of a minute, and then just the constant clanging of a bell at kind of, minute and a half or something.
So were you two both debaters?
Yes.
Yes.
Interesting.
It feels like you're about to go for a cheap shot here, Sean.
Not at all. Not at all. I admire your skill and ability to debate, both of you. Not that I've ever seen it. I wasn't.
There it is.
There it is.
I wasn't a debater. I always found it just too hard to sit there for that long and listen to other people.
Now you know how we feel after that last story. Adam, please.
Okay, so on topicality, both topical. On timeliness, both timely. On economic impact, both stories, immigration and inflation, both have impact. And on subjective bias, I like them both. And they're actually interrelated. Michael, I loved your flourish with the inflationary solstice. And Sean, immigration policy and increase in labour it's a bit surprising to me that, and pleasantly so, that the Labor government has been so forthright about this change. And hopefully this increase in human capital into Australia can help mitigate inflation.
Can we call them people rather than human capital? Just a thought.
Oh, okay, people.
People with excellent skills.
Yeah, skilled people coming in is great for this country, and it does link to mitigating inflation because if you've got more labour, obviously it can help to keep labour costs more affordable. So
short term, it pushes house prices up though.
Well, doesn't it? But so that's why both of these stories are so big. I have to call it a dead heat. Both excellent and good stories. Well done.
You were about to get the bell then, the warning bell. That was
going on too long.
Yeah, very long judgment. But you know what? I'm happy with that.
I reckon you should be happy with that.
Oh, I certainly am. I've never even managed to be able to scratch out a draw before when I've gone on to economics. So you know what? That's a new PB for me.
That's a dead heat using economics. Well done.
Now, Sean, let's go on to most remarkable story. What was it? You can go first on this one, seeing as you so kindly let me go first on the biggest. What's most remarkable for you?
Well, it's all about car manufacturers around the world, particularly about Tesla, but there's more to it than that. The electric vehicle manufacturer has shed more than a quarter of its value this month alone. The company has fallen below $500 billion in market capitalization. Okay, that's a lot of money. No one's arguing that. It's now the 10th biggest company in the world. But that doesn't make shareholders real happy. Imagine if you bought Tesla shares a month ago and they're now worth 25% less. Not happy. Basically, Elon Musk wants to cut prices and sell more vehicles, and that means margins are wafer thin. Hence, the sell-off. Pretty remarkable story in itself. But then I went looking for the biggest car companies, and this is where it truly gets amazing. Ford and General Motors are the 10th and 11th largest car makers in the world, about 1/10 the size of Tesla. Isn't that remarkable? Like, how can the two great car makers be? Anyway, the number 2 car maker, Toyota, is about 40% the size of Tesla. Number 3 is Porsche, and BYD is number 4. BYD, so pleased you asked. It's China's largest car maker. During the week, we found out that it's also one of the fastest growing brands in Australia, particularly with its EV making inroads into Telstra's market share. And of course, BYD stands for Build Your Dreams. The upshot of all this, Tesla's massive, going backwards, but Ford and General Motors are now about 1/10 the size of Tesla. Remarkable. Michael.
That is actually a remarkable story. But I'll tell you what is even more remarkable. The boss of Google's parent company, Alphabet, and his paycheck that he received last year, a whopping $226 million last year. That's about 340 odd million Australian. Boosted by a triennial stock grant. He earned it. I'm going to declare that he earned it because Alphabet was among some of the big tech stocks this week reporting earnings. And of course, it is earnings season on Wall Street. So that is a remarkable story in itself. And some of these tech company results have just been significant because you had Alphabet's first quarter results that exceeded analysts' estimates. Clearly, Google is handling the economic downturn well, better than expected. Meta had a good result, again, better than expected. Another biggie worth mentioning is Microsoft. Again, sensing a bit of a theme here, beating expectations. Clearly, companies are still spending on kind of cloud computing software and the like. Not obviously the greatest end to the week for Microsoft, with Britain's competition watchdog blocking the company's 69. Are you ringing a bell?
Turns out you suggested something and I'm just doing the right thing.
No, that wasn't a bell. That was wind chimes. And wind chimes in kind of the debating rule book mean go on.
My phone only has chimes. It doesn't have bells.
Well, I appreciate the attempt to silence me, but I will not be silenced. Obviously, I think I was talking about Microsoft and
no one knows. We'd fallen asleep. Go on.
The Activision Blizzard. So this was a massive deal, Sean. You need to be more kind of engaged in this because this was going to be the biggest ever deal in the gaming industry. $69 billion that Microsoft wanted to spend to buy Activision Blizzard. They're going to appeal the decision. That is just huge. But at the risk of doing an Aylmer, which is combining a bunch of stories into one and going over time, so there's two kind of Aylmers in one here. We talked recently about whether money buys you happiness, right? Because you talked, Sean, about a study that said, yes, it actually does. Well, $320 million isn't enough to give the Google Alphabet boss, Sundar Pichai, a restful sleep because he told 60 Minutes recently in the US that AI is worrying him, telling 60 Minutes that the urgency to work and deploy it in a beneficial way, but at the same time can be very harmful if deployed wrongly. That's keeping him up at night. Elon Musk is clearly worried because in the last couple of days, he met with a bunch of members of US Congress about the regulation of AI. So you've got Sundar Pichai worried. You've got Elon Musk worried. You've got a bunch of other eminent tech minds worried. Then maybe we should all be a little bit wary of the rapid rise of AI, but $320 million is a remarkable amount of money. It's a remarkable story. I rest my case. Adam, go.
So for remarkable story of the week, yes, they're a good collection of remarkable stories. Absolutely. But this week, Sean has to win this one. I mean, the fact that Tesla, if you look at the evolution of the car industry and its economic impact, billions across the world in the last 20 years, Tesla from 0 to number 1. Right? GM and Ford, 10th and 11th. That is incredible and a staggering expression of just how disrupted that industry has been. So I think Sean has to win Remarkable Story of the Week.
Thank you, Adam.
Let's take a break.
I think it's time for a break. Yep.
We need to take a very brief break. It is 1-1. No, it's not. It's 1.5 to a half. God, that feels like a long time ago, doesn't it? We'll be back in a moment with the sleeper story of the week. All right, so we are looking for the sleeper story of the week. So the sleeper story is maybe a story that's not getting the attention that it deserves, or perhaps it might be a bigger story further down the track. Well, shall I go first on this one?
Sure, you go first.
It is all about office tower valuations, which to some might seem a little bit niche because who owns an office tower? Well, thank you for asking. A lot of big funds do, that's who, and that includes potentially super funds. So that might well, in fact, be all of us. Anyway, now that I've established arguably the significance of the story.
Arguably, go on.
Onto the substance, shall we, Sean?
Yes, let's.
Fund manager Dexus is going to sell 2 office towers in Sydney, each for hundreds of millions of dollars, which is, it sounds like a lot of money, and it is. But it is less than they were worth a few years ago. And that's why this is so important, because these are well-occupied towers. They are in good locations, which, as they say in the real estate biz, it is very important. I would go so far as to say prime real estate. But they are the first major office tower sales in Sydney for some time. So this sale is going to, well, it is likely to set a new benchmark for the value of office space, which in turn will likely lead to a bunch of fund managers all being kind of forced to revalue some of the big assets in their funds. So it is perhaps a little bit removed from the day-to-day, but this can have a major impact on some big funds, which flows on to the little guy. Everyday investors, people with super, people like me. It sounds like the very definition, Adam, of a sleeper story. Sean.
Well, look, it is actually a cracking story, that I do give you that. And I would actually concede, except something even bigger in the world of investing. So mine's sort of along the same lines, but I'm not just talking about commercial property. I'm talking about all investing. Now, in the investing world, mine is a massive story which could well influence not just mums and dads investors and high net worth individuals, but superannuation funds as well. So bringing back to your line of thought, that's all of us. The $200 billion future fund is changing tack, changing direction, saying the era of easy money is over, and now it's going to shift to a more stock picking strategy. This is really important. Basically, for the last 6 years, the future fund has been following index funds. They're low cost, lots of benefits. But given interest rates are rising, inflation is rising, there's all sorts of winners and losers in that. So just following the market doesn't make as much sense, according to the future fund. In fact, you have to be an active investor. So it wants to use expert fund managers, pay them more money. They don't mind that. They'll even invest in domestic small caps for the first time just to get better returns. This debate is all about passive versus active management. And the future fund has, after 6 years, has gone from passive to active. That is, no one's talking about that much. It is definitely a sleeper story, but it is very, very important for all of us with superannuation. Adam, try and sort between those two little gems.
Wake up, Adam, and get into this. Yeah.
That's right.
They're both crackers. I have to call it even on this one as well.
Oh, you little beauty. Where did I pull that one from?
Well, look, the office tower valuations, commercial property isn't just, office buildings, it's warehouses and so on. It's such a broad portfolio. To see how that impacts all of the funds is going to be incredibly interesting. Sean, your point is relevant to the future fund and beyond. So the $200 billion future fund, it's changed from passive versus active. I really doubt they're going to be the only one, right? And so I think what you've pointed out, both of you, is really good sleeper stories. Dead heat.
Well, the best part of this is that I might end up with like 2 draws, and it could well be my best ever result. This is amazing. We're currently at 1.5 to 1.
No, we're at 2 to 1. 2 to 1. But you've had a win in economics and you've had a win in investing, which, and I don't mean to be rude to you, Michael, they're not your strong suits.
The student is becoming the master.
And this was always going to happen, Sean, after we worked together for a little while at some point.
I feel like Yoda.
No, look, think of it more of like a Fijian coup. And so at some point, the tyrant must be overthrown.
That's a bit rough on the Prime Minister of Fiji. Let's get on to the favourite story. I'll go first this time. How about that?
Please do.
It's got to be home prices. We find out how home prices went during April next week. But for the time being, let's just enjoy the good news of this week. Well, it's good news if you own a house. Falling house prices have stabilised. And this week, both Westpac and ANZ, the second and third largest home lenders in the country, came out and changed their mind. They said they thought prices had bottomed. Yes, Michael, bottomed.
What's funny about that, Sean?
Yeah, exactly. Nothing's funny about that. Then we spoke to Gareth Aird after the inflation figures. Now, Gareth's head of Australian economics at the Commonwealth Bank. He hasn't called a bottom to the market yet, but he's couldn't help yourself. But he's definitely thinking about it. Now, Commonwealth Bank, of course, is the country's largest home lender. Why? Well, immigration, strong demand, they seem to be the key reasons. We know that across the country, prices fell from peak to trough 9%, more so in Sydney and Melbourne. I love the prices, though, that three of the four, and we're going to put Commonwealth Bank in here, even though he sort of hinted at it, three of the four biggest lenders, in fact, the three biggest lenders, reckon that we've seen the bottom of the housing market. Now, doesn't that affect a lot of people? Millions of people. Favourite story. It's got to be the best story, maybe of the year. Certainly this week. Michael?
That felt a little bit like a scramble, a desperate scramble there at the end. You were just like, I need to add a bit more mayo to this. Story of the year, you called it. For my favourite story, we're returning to probably terrain on which I am more comfortable than say economics or investing, which is really the majority of fear and greed. We're going to look to the skies for my favourite story.
What a surprise. What a surprise.
Which is a fancy way of saying that I'm combining two aerial stories into one.
Oh, really?
Yep.
That's unusual.
A good news story to begin with, shall we? Chinese tourists are travelling again. Now, this is very, very good news for global tourism. I don't think I can emphasise that enough. Very good news. Because pre-pandemic, 2019, about 170 million Chinese travellers went overseas. Last year, obviously lockdowns, etc., it was 9 million. That same number, 9 million trips, are expected to be taken next week alone by Chinese travellers. So investors and airlines are obviously watching this very closely, and it will be great news for the Australian economy too, because Chinese visitors to Australia make up a significant kind of portion of tourists here. And our tourism sector contributes $152 billion to our economy. It supports more than 300,000 businesses, employs more than 660,000 Australians. So the return of Chinese travellers has huge economic significance. Plus, of course, we had Flight Centre boss Graham Turner recently talking about the fact that international airfares will start falling in earnest when the Chinese start travelling again. So, good news. That's story number one. The other story that I need to mention, and I do acknowledge that I run the risk of shooting myself in the foot here. I probably actually should have just finished there and accepted the victory. But now I'm kind of adding a bit much to it, and I worry that I'm kind of going too far. But I want to talk to you about Japan's ailing space program.
Sorry, what's that? What's that got to do with Chinese tourists?
I didn't say it was linked. All I said was that they are two aerial stories. I said we are looking to the skies for this, Sean. Clean your ears out. This week, Japan attempted to make the first private moon landing. They did not succeed.
Did you ever see the episode of Modern Family when they talked about moon landings?
I did. I've seen the whole show. I don't remember it.
It's a famous one where Cam is married to Mitch, is that right? So I'm getting the characters right.
Correct.
Cam and Mitch's father play racquetball or something like that, I think. And afterwards, they're in the change rooms, and there's a bench in the middle of the change room, and they're both getting changed, and they sit down with their backs to each other and touch. And Cam goes, "Oh, moon landing."
Moon landing, right.
And the father, Mitch's father, what's his name?
Jay.
Yeah. And Jay basically jumps up And he said, "You've got a name for that?" And we have all done it, let's face it. But that whenever I hear the term moon landing, I think of that particular episode. Let's just move on, can we?
Japan's private moon landing.
Oh, my God.
Did not succeed. As this aircraft was this, I suppose, a lunar module, I suppose, as it was attempting touchdown, data shows that the lander's speed increased rapidly, which I'm no expert, but I think that's the exact opposite of what you would want it to do. It did complete 8 out of 10 objectives, apparently, but obviously...
But not the 9th one?
Objective 9 was a significant one. Landing would have been good. It comes out just a month after Japan's other great hope, which was a new, cheaper rocket, failed just after takeoff, and they had to hit the self-destruct button on that one. It's not a good time for Japan and its role in the... I suppose it's a bit of a space race, isn't it? Everyone's kind of racing Elon Musk to do things, but without sounding patronizing, which is good on them for having a crack.
Back to moon landings.
Back to...
Help me, Adam, help me. Please.
Sean wins. Just to add some brevity to the occasion. Reason being, yes, tourism is incredibly important, $150 billion sector.
You don't have to treat Michael's story seriously.
Well, yes, there is economic impact, right? But we've got trillions in property and millions of property owners. And so it just gets whacked by house prices.
Yeah.
So
I respectfully disagree.
well, no change there.
Now, what was okay? So that was
story count 3-1.
Oh, that's a thrashing. What was on the points?
On the points, Sean again. Look, he's done a repeater last week, 94 points. He's on form. Michael, 87 points.
Where did I fall down?
Wow, you didn't come home strong.
It's only because of bloody Modern Family and the whopping great interjection that needed a bell on it. Thank you very much.
I mean, I was trying to keep the audience.
You know what? The people will speak on this one. They will have their say.
Let Instagram have its way.
That's right. I'm not calling for a coup, but I'm just saying that if there was one.
Starting with the judge, then Sean.
That's right. All right. No, look, good competition. Lengthy competition, but we got there in the end. Thank you very much, Adam.
Thank you, Michael, and thank you, Sean.
Thank you, Sean.
Thank you, Adam, and thank you, Michael.
All right. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, Twitter, Facebook.
You sound a bit dispirited, Michael.
I'm not dispirited.
I'm worried.
Just limping home.
I'm just regrouping. You know what? I put so much of myself into these shows. I give it everything. But anyway, one day I'm going to have just an absolutely smashing victory, 98 points to 81 or something like that. And then I think we'll all be happy. Don't forget as well that you can stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, Alexa, play the Fear and Greed podcast to catch the latest episode. You can get yours now at amazon.com.au. I'm Michael Thompson. Have a great weekend.